What's up, everybody? This is Mike from Foos 4 Trading. Welcome back to the small cap recap. Want to go over some movers recently, but before we begin, I'd like to discuss the market in general. As you guys know, I've mentioned this in prior video lessons. There's been a major divergence in each indice. The Dow. You can check out the Dow chart. Not as bullish looking. Transports tend to be leading indicators, which is why I like to look at them. This 25.4 level has been pretty significant, and ever since then we've come back down, kind of broke or at the 100-day. So not as good looking of a chart, but then you go look at the Russell, and holy macaroni, this thing has been on an absolute tear. So what does that say? These small caps, this protectionist policy, money coming back into the U.S., these small caps are benefiting. And just taking a look at the Nasdaq, tech has been leading the way as well. Netflix, Amazon, all these stocks are Facebook over 200. All these stocks have been making new highs. So, this is what is working, and I think you want to stick with a lot of these. Even the SPY, which tends to be more tech, kind of has a similar chart to the Dow. So you want to watch the tech stocks. You want to watch the Russell. They're kind of leading the way right now, and financials are kind of lagging as well. So those are the two indices you want to watch. But until then, small caps haven't been correlated. It's been a day trader's dream for us. So the first stock that I want to talk about is ASTC. So this market's been pretty nuts, guys. I've said it on my Instagram and social media. Summer trading, it's not that it's slow, but I personally believe that it's all about trading the first 60 to 90 minutes, locking in your gains if you have them, and taking a step back to reevaluate. If you're hanging around from 11:30 to 1:30, the action can be very very tricky. As I've said this before, you can afford to be a little sloppy and messy in the morning, but you cannot afford to be sloppy and messy intraday. And the intraday trading has definitely been not as high risk reward, more so scalp opportunities. So I prefer to short at least aggressively these day two movers. ASTC was a great example of a stock that went completely parabolic and is very indicative of the market we're in. But after it faded yesterday and dropped below this 560 level, or even 550, I guess we should say for that halfway, 576, I was looking for a day two short. Now, what I was looking for personally was because this was readily available to short, I like to attack these day two shorts in that once they break down support, you want to see them pop back at support or even above it a little bit on day two, and that's a typical panic pop or shorts panicking and longs seeing looking for some type of red to green move. So you can see pre-market this thing was at 590, it ripped to 614. So I had some orders out there right here at 580. I thought that was a good spot. I'm going to risk 30 cents and play that move back down to sub 5, risking 30 cents to maybe make 90. That's a great risk reward. So fortunately, didn't get my fills. Popped up, did exactly what we were expecting. Was talking about it in chat. Panic pop. Unfortunately, gets to 575 and then completely eats it. So by 11 o'clock, you have a move from 575 to basically 475, and it's basically a 20% plus drop. So you're getting a 20% move, literally, guys, within about an hour. That's day trading at its finest. At that point, 10, 20, 30%, you make that, you lock it in, you go enjoy your day. That's what summer trading has all been about. And then the rest of the day, it did absolutely nothing. So a little bit disappointed that I couldn't participate in the trade, but just showing you guys the type of mindset how once it breaks down major support, you want to be shorting pops at or near that support zone. So ASTC was a great fade, especially a day two short. The other one was CLBS, very similar, and one that unfortunately I missed as well. You could see, indicative of the market we're in. This thing goes from $4 and then goes all the way to 12. Now, looking at a longer term chart, this thing has resistance basically at about 13. So I was looking for a pop over 12 really briefly, and unfortunately didn't get it. As a day two short, what I like to see is if the stock is not below. So this is your $10, your psych zone, considered support. If it gets below that, that becomes resistance. So as long as the stock is above that, it's tough to gauge the top unless you get a stuff move. So I was hoping for a stuff move near 12. I thought 12 to 12.30 was a good range. But at the open, and this is a strategy Why I like to use pre-market levels, you get the retest of pre-market highs. Once that fail comes in, you had everybody hammer this thing right here. So it dropped from 11.70 down to $10 within 1 to 3 candles. So 3 minutes, almost a 20% drop. Nuts. And then it goes all the way back down to 9. So even a 30% move within 30 minutes. At that point, if this hits 9, I was hoping to get 12 to 9 would have been a nice 3-point move. But again, have a game plan. You stick to that game plan. If you miss it, so be it. So what happened was once this broke down 10, I think, or 10.50, you had everyone shorting these pops, and then it just faded back down. And going back to the strategy that I mentioned recently, incorporating the 13 EMA. And this is on a 1 minute. I usually like, if I'm using EMAs, I want to use 2 minute or 3 minute. You get the pop up, and it rode the EMA all the way back down to 9. Then once we pop back above here, this is where you want to maybe be taking profits. God forbid it reclaims and goes to test a VWAP. So all day, you can see this 950 level was significant. Pop up and short, but I think the meat of the move was just right here. Take that, go enjoy your day. Everything else has been intraday headaches. So again, unfortunately, was not able to participate in that one. GEVO was another one that was a tough borrow, but this formed the perfect, in my opinion, topping out pattern where it's just a huge ass head and shoulders, I think. And this thing will probably be back at 6 or 5 within the next couple of days, in my opinion. They just did, I'm pretty sure, an ATM, so look at it as left shoulder, head, right shoulder, and kind of your neckline right here. So once this thing failed, it's lights out. This thing's. Fortunately, I was looking for shorts yesterday, but everyone and their mother was looking for shorts. Pretty sure some institutional traders even had a tough time finding shorts. So that's been tough lately. Is sometimes you can have the game plan and you know it's going to work, but you can't get the locates. It's unfortunate. That's the way the market's been lately. That's all about having good brokers and multiple accounts, I think. So besides that, last one was AETI. Once again, sticking to the morning. So this was actually a very tough trade intraday because I think that this became a zombie stock. I had tried to dabble on this one. You had the breakdown at 150. It dropped to 125. This thing was just at $1. So I had dabbled right here at 152 for a short, and I think everyone was looking for that 50-cent level. So once it squeezed over pre-market highs, you got this really nice squeeze all the way to about 190. Which I think was the top. Huge resistance here at 2. But the tape was very strange on this. It's a low float, higher institutional name. So stopped out of my short. I reattacked at 178 and covered into this wash into 160, but I was hoping for a really nice fade. So then what happens is once these things hold VWAP all day, guys, it's not the most high probable trade. It did end up working out because you did have one more retest of this breakdown zone at 183. Or 184, 185, that zone. So that was where you could have dabbled right here, maybe risking off of 190, risking 5 cents, and this is when it cracked and started to show backside. So once that crack was in, we're under VWAP. That's when you can short pops over VWAP, in my opinion, risking this 180 level, because this is where, right here, where it broke down. So I was hoping for a pop back up to about 175, but it didn't get to my target. It gets to 172. And at this point, this to me could have been, a possible inverted head and shoulders. And if the inverted head and shoulders fails, I like to call that the inverted head and folders. Where left shoulder, left shoulder, head, right shoulder, and then what you get is 1, 2, 3, 4. That never happened, so this was a head and folders, and this is where you could have hit the backside, but definitely a little bit of manipulated on the level 2. I think this was close to 40% institutional ownership, so it goes to show you that, once again, the intraday is tough. You cannot afford to be as messy. You can't afford to be sloppy, so you can afford to be sloppier in the morning. Take advantage of that, first 60 to 90 minutes volatility, get in, get out, and go enjoy your day. So I hope everybody's starting to realize the theme. Although there has been movers all day, I'll give you actually one more example, is Ford. And I preach it all day, but sometimes even I screw up as well. I'm human, just like every one of you guys. So it was Ford, and after my day, I was a little upset. I go to walk my dog at 11. I'm like, all right, let me go take a breather because I'm probably gonna have a little FOMO on some of these stocks. And I come back at 11:30, and I'm like, shit, this Ford just went from 150 to 250. This zone was hot off the halt. I love these post-halt rips to short, and you could play the wash down to two. So then I was looking at this, and then tried to reattack pops over two, wasn't getting fills, and then I started to get FOMO. And this is where, because I missed my fills on other trades, I started to think, I got to hit something, right? But no, that's when you should be like, all right, not my day, need to walk away, and there's always another opportunity tomorrow. So you had this nice resistance at 210. Ford is a turd, everybody knows it, gives back its gains almost all the time. So I was hoping for a nice pushback to 170s or sub, and this was forming a really nice, what I thought was just a nice fading pattern. So I had shorted, you guys can see I posted on Twitter right here, looking for the fade. And then I see this volume, the level 2 is getting sketchy, and I thought, maybe there's a lot of other people trying to look for the same move. This can get crowded. That's the market we've been in. I cover at break even, and this thing it rips a buck within 15 minutes. So this could have went from, I'm just looking for a quick scalp to shit, I just ruined my entire day. So that is why going forward for me, I'm literally going to be trading till 11, 11:30 tops. Going to go get my lunch, take a nice break. Um, and I think I saw somebody post about how retaining that mental energy throughout the day, guys, like it's really difficult. I'm behind the screen at 6:40 a.m. now Eastern time. It's very difficult to not only, be sharp, but to have the energy to think properly sitting behind the screen from 6 a.m. to 4. That's a long time. So incorporate breaks. That's what I'm going to start doing. Once 11, 11:30 rolls around, I'm all cash. I don't care what's happening. If I'm up in the day, I'm looking to keep it because most people can make money in the market, guys, but most people cannot keep it. So looking forward to giving you guys some more free content. Check us out, Trading Live, foods4trading.com.